Hi, I'm Chris Zander, the CEO of Evercore Wealth Management and Evercore Trust Company. I'm joined here today by our National Director of Wealth Planning, Justin Miller, to discuss pre-transaction planning for founders and executives. The sale of a business can be the culmination of many years of hard work and sacrifice, but we know from experience that transactions can also pose many practical and emotional challenges for individuals and families. So Justin, thanks for joining us today. And Justin, how would you describe the issues facing clients when they're working with a team of investment bankers, accountants, attorneys, and other advisors leading up to the sale of their business?
Well, I would say the rule number one is not to lose sight of the personal planning while you're focused on the business planning. For any founder or executive going through a business pre-sale transaction planning, of course, they're going to be very, very busy with the transaction itself, the due diligence, the negotiation. And at the same time, they're also going to be busy continuing to run their business on a day-to-day basis. So where a good wealth advisor fits in is they're there to be a big help to take something off that founder's or executive's plate. They're there to make it easier, to reduce the hassle in the administration. And what we found is if that wealth advisor is a collaborative part of the advisory team, it can actually help the transaction close quicker and more seamlessly.
That's a great point, Justin. So how would you describe the most effective role for a wealth advisor working as part of the transaction advisory team?
Well, I'll give you the key of what we do at Evercore Wealth and Trust, and that is we have a disciplined process. We think process is so important when it comes to planning, especially pre-transaction planning. So I'll walk you through it. So let's start with step one. Step one of our process is we review all the materials, the documents, and then we provide a written assessment. That would include something like a personal balance sheet. I mean, every company should have its own balance sheet. We think every person, every family should have its own balance sheet. What are your assets? What are your liabilities? What's your net worth? We also prepare what we call a lifestyle cash flow analysis. And on top of that, we also do a flowchart summaries of the overall tax and estate plan. So that's just step one. That's the assessment part of the process. Step number two, that's where we get into what we call the optimization part of the process. This is where we take our initial assessment and then we work with the attorneys, with the accountants, with the client's other advisors to optimize the plan. A big part of that part of the process, what we do is provide the detailed financial analysis, meaning after we implement this plan, how is it going to actually work for the client and the client's family? And that is, are they going to have sufficient assets to meet all their financial objectives and goals for the rest of their life while balancing any desires to make gifts to, let's say, loved ones and or charity? And that brings us to step number three. Step number three, I would argue, is the most important part of the process, and that's implementation. And so really, what's the point of a plan if you don't actually implement it? So the implementation part is where you actually work together. So the wealth advisor, the attorneys, the accountants, all the other advisors working together collaboratively to make sure all the documentation is actually completed and signed. All the trusts and entities are formed and funded correctly. And when it comes to titling, making sure everything is titled correctly.
I strongly agree, Justin. Having a disciplined planning process we've seen from time and time again has been essential to a successful transaction advisory assignment. But even maybe equally important is the tax planning, which I know you're very passionate about. So give us a couple of points on the planning challenges for founders and executives as they're working through the pre-transaction process.
Well, when it comes to taxes, the earlier you plan, the better. One of the things I always like to say is plan early and plan often when it comes to taxes. If we had 4 to 5 more hours, I could walk through the various strategies. I teach law school. I'd be happy to do that.
I'm sure you could.
But what I will say is ultimately it has to be customized for every individual founder and executive, depending on their financial goals, their objectives, their family situation. It also depends on the deal of the transaction that they're facing. Are we working with, let's say, common stock, preferred stock, restricted stock? Is it voting stock or non-voting? What type of entity is it? Is it a C corporation, an S corporation? Is it a partnership or LLC taxed as a partnership? What's going to be received in the transaction? Is there going to be continued interest, let's say with private stock, with public stock? Depending on the answers to all those questions, what we would then do is customize the analysis and the tax planning, because there's a lot of both income tax, federal income tax, state income tax. There's gift taxes, estate taxes, even generation skipping transfer taxes. And there's many strategies that could be a good fit, such as if there's qualified small business stock under Section 1202, that could be tens of millions of dollars of income tax savings for the family. If there's going to be multi-generational planning involved, there's strategies such as grantor retained annuity trust, or GRATs, intentionally defective grantor trusts, or IDGITs. There could be spousal trusts, dynasty trusts. And if there's a desire to give to charity, either during life or after death, there could be donor advised funds, private foundations, maybe even involve charitable remainder trusts or charitable lead trusts.
Clearly, there's a lot of technical complexity, and we've been through this many times before. But what else would you add on the other aspects of the transaction planning process that individuals and families should consider?
I completely agree. Taxes are very important. They're very important to our clients. They're very important to us. They're very important to the team of advisors. But it's not just about tax planning. For a lot of our wealthier clients, what's also equally, if not more important, is preserving and protecting the assets, especially for next generation, children, grandchildren, maybe even beyond. And when we talk about asset protection, we're talking about protection from potential creditors down the line, even protection from potential divorce of children and grandchildren down the line. That is very important when it comes to planning. And it's not just about pre-transaction planning. It doesn't stop once you've completed and closed your transaction. Planning is important. Post-transaction planning, this is an ongoing process. This process that we implement, we don't just set it and forget it. It's not like some product you put on the shelf. And so once that transaction closing, there is going to be a need to update that plan. New circumstances will arise. We don't know what's going to go on in the economy, the local environment in terms of inflation, interest rate changes. So we're constantly updating this plan, even changes in family circumstances. Grandchildren might be born, great-grandchildren down the way. So this is why planning and adjusting that plan is very important as part of that ongoing process. And I have to end with at least one final statement, and that is, it's not just about preparing the money for the family. Don't get me wrong, that's very important. The money is extremely important to our clients, very important to us. But ultimately, for a lot of our wealthier families, it's not just about preparing the wealth for the family, it's about preparing the family for that wealth. And this is where we work with the entire family on preparing them in terms of financial education, balance sheets, financial planning, and ultimately, which is a big value for many of our clients, and that is preserving their values. Things often that we see such as hard work and education, making sure that's passed on to the next generation and future generations.
Thanks, Justin. I can't agree more. Strategic wealth planning before, during, and after a complex transaction is essential to set the foundation for our client families to manage, grow, and protect their wealth. We really appreciate your time today, and if you would like to learn more, please do not hesitate to contact one of our Evercore Wealth and Fiduciary advisors. We look forward to the conversation. Thank you.